Today we move on to our 6th video in our series on gold. So hello and welcome back to our channel. Over our last few videos in this series on gold, we've looked at why gold has performed so well in the last 20 plus years. I've then highlighted 4 different ways you can secure financial exposure to gold, and we've covered 3 of those so far. So as a reminder, these have been, firstly, buying physical bullion, so buying actual gold and taking delivery of it yourself, or secondly, using one of the online service providers to buy gold who can then hold and store it for you. And specifically, in a previous video, we looked at a company called Bullion Vault, who I've used to do this myself for many years, and who are the largest company of their kind in the world. Then in our last video from earlier this month, we looked at gold ETCs, or exchange traded commodities. An ETC, as I said, is just a vehicle that trades like a share on the stock market. ETCs are designed to track the price of a given commodity, whether that might be gold, silver, another metal, or something like oil, for example. And as I explained in that video, one of the main advantages of using an ETC to invest in things like gold is that you can do this in an ISA account and even a pension account, depending on what kind of pension you have. And this can have significant tax advantages. So if you want a reminder of all of these points, do please check out that last video. And also, as a more general comment, do please watch the playlist of this entire video series if you want to get a really good understanding of gold as an asset class and compare and contrast the various different ways you might buy it. Today, we move on to our 4th and final way of getting financial exposure to gold, should you decide you want to do that. And that is using something called a spread betting account. So the other way you might look to secure exposure to precious metals, particularly in the short term, is by using a spread betting account. Many people have not heard of spread betting, but for an individual who is prepared to put the time in, it can be a powerful tool when it comes to investing. And I'd actually argue that we're quite lucky that we have access to spread betting in the UK. There are relatively few countries in the world with a developed spread betting industry, and it's actually illegal in the United States, for example. So, what is spread betting and how does it work? Well, the first and very important thing to say is that it is, without doubt, only something you should even vaguely think about if you're prepared to put in a great deal of work. It is complicated, and if you don't know what you're doing, it's possible to lose a large amount of money very quickly. It's actually even possible to lose more money than you have in your account if you get things wrong. So this is very important to understand. If you have a spread betting account, you are quite simply able to bet on the movement of a massive range of financial assets. So rather than betting on football, horses, dogs, or the cricket score, you can bet on things like shares, commodities, and other investments. And you do this by betting a certain monetary value per point on whatever asset you have a view on. So to explain that, let us say that you thought the gold price was likely to go up. This would mean that you'd want to go long or buy gold. So you then decide how many pounds per point to go long. And when I wrote the first edition of my second book, Live on Less, Invest the Rest, about 6 years ago, gold was trading at around $1,300 an ounce. So at that price, if you decided to open a long position on gold at £1 a point, you would then have had a theoretical exposure to gold of £1,300. That's £1 a point multiplied by the price of $1,300. And by the way, please don't be confused about the fact that I'm talking about pounds and dollars at the same time here. If you go long £1 a point in something trading in any currency, your exposure is a function of the absolute number of that financial asset multiplied by £1, regardless of what the currency was. And the key thing is to make sure that you understand what a point is in any given asset. One of the things you'll need to learn if you decide to use a spread betting account. So if you decided to bet £1 a point on gold when it was trading at $1,300, and if you had kept that long position until today, your running position would now be worth about $3,300, with gold now trading at that price. If you choose to close your long position at this level, i.e. to sell out, your profit would therefore be 3,300 minus 1,300. So you've made 2,000 points and multiplied by the £1 a point you bet, that would be £2,000 in this example. If you decided to bet £10 a point when you originally put the position on, your original theoretical exposure would have been £13,000 worth of gold, and you would now be taking a profit of £20,000. So that's simply the 2,000 points you've made multiplied this time by £10 a point. Very sophisticated and wealthy investors or traders might even have bet £100 a point or even more than that. £100 a point would have implied an exposure of £130,000, and that lucky investor would now be taking a profit of £200,000. Three aspects of spread betting generally which are worth highlighting are as follows. First, that you can end up with a theoretical exposure to whatever it is you're betting on that is worth far more than you actually have in your spread betting account. So if you wanted to own £1,300 worth of gold by buying the actual physical metal or by investing in an ETC as we looked at in the last video, you'd actually need £1,300 to do that. If instead you make a bet through your spread betting account, you would only need a fraction of £1,300 in your account as a deposit in order to make that bet and control that position in gold and end up with the same theoretical exposure. If all of this sounds quite complicated, this is because it actually is quite complicated. It's absolutely critical that you have a very, very good understanding of how all this stuff works if you're going to go anywhere near using a spread betting account. But if you do learn enough to understand what you're doing, this can be powerful. You can end up effectively owning, or at least controlling, thousands or even hundreds of thousands or millions of pounds worth of an asset using a much smaller amount of capital. This is something called gearing or leverage. And if you do this, the spread betting company you use is effectively lending you the money to put your position on. And this is one of the many reasons why spread betting can be dangerous, and you must go very carefully, as is always the case if you borrow money in any shape or form to do any kind of investing or trading. So the second interesting thing about spread betting more generally is that you can bet on things going down as well as up. This is called shorting, which you may have heard of. So you can bet however many pounds a point that the price of a given asset might fall in value, and if you're correct and that thing does fall in price, you make money. And again, this is a highly specialist and difficult thing to do. It's really important to stress that no one should do this unless they have a very solid understanding of how financial markets work, and I would argue of things like fundamental valuation and technical analysis. These are topics I covered to a certain extent towards the end of my first book, How to Own the World, and I've covered in some of our previous videos on this channel too. So the third aspect of spread betting, which is pretty interesting, is that any profits you make are free of tax. With spread betting, there's no stamp duty to pay, no capital gains tax on any profits you make, and no income tax unless you're considered to be a professional trader who consistently makes an income from spread betting. So for those with the time and willingness to learn, and to learn quite a lot, by the way, spread betting is another powerful way you might get exposure to precious metals, and indeed to pretty much any other investment theme you might think of for that matter. If you're going to use a spread betting account, however, you really must ensure that you learn enough about it before you start. Depending on who you ask, between 70% and 90% of people who spread bet lose money. And as with so many things, I would argue that this is because between 70% and 90% of people don't learn enough about it before they do it. If people went out on public roads in a car before learning how to drive, what percentage of them would crash, for example? If you're going to use spread betting in any shape or form, it is crucial that you learn enough about it to put yourself in the top percentage who can use it prudently. And I would argue in that endeavour, you probably need to be an A-grade student, by the way. So the UK's leading spread betting provider is a company called IG Group. And as they put it on their website, and I'm sharing here for good order, to quote their disclaimer, spread bets are complex instruments and come with a high risk of losing money rapidly due to leverage. 68% of retail investor accounts lose money when trading spread bets, which I believe is on the IG platform itself. You should consider whether you understand how spread bets work and whether you can afford to take the high risk of losing your money. It's very important indeed to bear these kind of risk warnings in mind. However, for the advanced investor or trader, a spread betting account can be a useful addition to your roster of financial service providers. As I say, I've had an account with IG myself for many years. Another point I would make here is that in my opinion, you should certainly not have a spread betting account or go anywhere near it as an activity until you have significant savings and, crucially, have already done the best job you can with your pension and ISA arrangements. If you've watched this channel for a while, you may remember a video I did back in January of last year, which was called The Crucial Difference Between Investing and Trading. And I would argue this is one of the single most important videos I've done in the whole of this video series. As I said at the time, one of the reasons so many people fail with money and finance, particularly nowadays with the rise of the crypto market and thousands of finfluencers who've never actually passed a finance exam, is that all too few people understand the very important difference between investing and trading. These are two completely different things. And investing is for absolutely everyone and almost no matter how much you earn. As I've shown throughout this series, investing is something everyone should do as soon as they're able to do it, and even with absolutely tiny amounts of money, and should continue to do as a gilt-edged life commitment for their entire life. And also, no matter what is going on with the news or the economy too, by the way, as we've looked at in a fair few of our previous videos. Crucially, the same cannot be said about trading. And at the most basic level, the reason that this is so important is quite simply because for the significant majority of people, as a statement of empirical fact, you have a high chance of making money and becoming wealthy if you invest, and you have a high chance of losing money if you trade. This is true for the vast majority of people. Failing to understand the difference between investing and trading is one of the key reasons that so many people fail with their finances. It is also one of the reasons why so many people fall foul of scammers and con artists. To be clear, as I've said before, I have nothing against trading as an activity overall, philosophically and big picture, because done well and done at the right time in your life, when you have enough capital, it can be powerful and it can be a great way of increasing your wealth. It's just really important to understand the difference between these two activities and, crucially, the fact that getting investing right should be a much higher priority than learning how to trade for most people. Investing really should be everyone's first priority. And this is why I'm suggesting that you must only consider opening a spread betting account after you've made the most of your more conventional investment accounts, such as an ISA and your pension. Philosophically, this channel is all about investing and not trading. And spread betting is very much more of a trading approach. But I thought it was at least worth covering, not least because I've used it myself to secure exposure to precious metals over the years, and it can be a good way of doing that. So for those of you in our audience who have a fair bit of investing experience, and I would also argue a decent amount of capital already too, you might have a look at spread betting as another potential option when it comes to getting exposure to precious metals, and indeed just more generally. And finally, if this describes you and you don't yet have an account, and if you'd like to support all the work that goes into this channel, we do have an affiliate deal with IG, who, as I've said, are the biggest company in the space and who I've used myself for several years. If you're thinking of opening an account and thinking of doing spread betting, do please consider using our affiliate link, which you can find in the description and pinned comments below. As a reminder, there'll be no additional cost to you if you do decide to go that way, but it will be very helpful for us as we seek to continue to invest in this channel. And if you do decide to go that way, please do go carefully and take account of everything I've said in this video about how important it is to understand spread betting if you are going to use it. So that's it for today. As ever, if you want to ensure that you're one of the first to see our videos when they're published, please do click the subscribe and bell buttons. And please do also subscribe to a free email service from the Plain English Finance website. And if you'd like to hear from me more regularly, please do feel free to connect with me on any or indeed all of LinkedIn, Facebook and X. Until next time, and until next time when I do a video where I haven't got man flu, as hopefully has been fairly clear in the course of how I've gabbled my way through this week's video, I do wish you and yours the very best, and yeah, hopefully I'll be back on my feet next time. Bye.